Leaders of Asian economies have expressed relief about the pause on higher tariffs coming to effect, but many are wondering who will blink first as the trade war between China and the US escalates. Well, for more, I'm joined by Managing Director and Chief Economist at DBS Bank in Singapore, Taimur Baig. Now, Taimur, we're seeing Asian stock markets slide again after a rollercoaster week for markets around the world. With all this uncertainty, do you think it's just going to continue like this until Donald Trump and China sort out what they're doing with tariffs?
Hi, Yvonne. I don't think there'll be any sorting out. We're looking at divorce proceedings here, and I think it's a bit too late. The papers have been filed with the lawyers. It's just a question of how acrimonious the divorce would be and what would be the fallout for the rest of the world. We're talking about the two of the largest economic blocs in the world with very consequential producers of technology and hardware and services and goods. And the impact of that would ripple through the global economy. I don't expect any major breakthrough in trade talks. I think the expectation from the White House is the pain of these tariffs would be so large on China that they would blink first. My fear is that they're underestimating China's resolve, and the U.S. markets, particularly the U.S. bond market, might end up having a more of a disciplining impact on the U.S. before it actually manages to move China.
Well, tell us a bit more about the impact and the ripple effects it'll have on the region in Southeast Asia and also in India, which is a manufacturing hub and could stand to benefit from all of this.
Trade wars are lose-lose proposition. Nobody will benefit from it. It's just a question of gradation of who loses less than the other. India may find some trade coming in its direction because people will not want to produce in China, but the global impact, whether it is excess supply of Chinese products in the rest of the world, which would put undue competitive pressure on any aspiring Indian exporters, or the fact that the U.S. will remain protectionist regardless of how friendly they're with India, would remain a feature of the global economy and the U.S. playbook, if you will, going forward. So I don't think there are any winners at all. But the near and clear present danger is not trade related. We will see the ramification on the trade sphere in the coming months and years. That'll take a while. What we can see right now is that the aggressive nature of action by the U.S. is having destabilizing impact on the global financial markets. So long before you and I have enough data points to discuss what's happening with trade realignment, we will know how damaging the action of the last few weeks has been on global banking system, global liquidity, contagion of financial markets, on the rate space, on the FX space, and so on. So to me, the place to watch now is not whether India benefits from China plus one reshoring. That's down the road. The question to see right now is that are we going to have a major global financial conflagration?
Do you think Donald Trump is starting to see the effects and to realise what needs to be done in order to correct it? Are you seeing him start to change his tone?
Not really. I see him fairly emboldened by the attention he's getting from the rest of the world because, all the tariffs were announced and half the world decided to call the Washington, D.C. and try to come up with some sort of a negotiating position. So I think he is sort of thinking that, whatever he has done is working. Vis-a-vis China, a whole different story. That's a much higher stakes ball game. But with the rest of the world, I think the Trump White House view right now is that whatever they did, they're accomplishing what they want to do, which is bring a bunch of countries back to the trade negotiation table and get a lot of concessions out of them. The market may have a sobering impact, chastening impact, but I think it would probably have to dislocate far more before a White House pivot can be expected.
Meanwhile, what do you think is going through Beijing's mind and its strategy going forward? How will it deal with the impact of these tariffs?
The White House view, which is that the Americans have the leverage because they run a large $100 billion trade deficit vis-a-vis China, is not necessarily something that is a mirror image concern on the Chinese side. The Chinese believe that the Americans don't have too many substitutes for all the goods they import from China. China, on the other hand, can readily find substitutes of the agriculture products, in particular, they import from the U.S. The Chinese also see U.S. service sector running a very large surplus with the rest of the world, including China, and they feel that if the U.S. thinks they have a leverage on the goods side, China has a leverage on the services side. More importantly, we're not just talking about $700 billion of trade between these two nations. We're also talking about $1.4 trillion of U.S. treasuries held by China. So I don't think the view from the White House that they have all the leverage is shared by the Chinese. They, of course, know that their export sector would be hurt. They, of course, will ease monetary policy, fiscal policy, and carry out structural reforms to support the export sector. They're also reaching out to the rest of the world with a clear message that they are open for business and they would reduce tariff for others to come into their country for investment for trade purposes. So while the US, the bastion of free trade over the last 60 years, turns inward, China's game plan is to turn outward.
Well, Taimur, it's really good to get your thoughts. Thank you so much for joining us.
My pleasure.